Silver is on the move, and the world is finally waking up. Today is September 21, 2025, and the silver market has just become one of the most important stories in global finance. For US investors, savers, and anyone watching inflation and interest rates, silver isn't just another commodity anymore. It's a barometer of economic stress, industrial demand, and the search for stability in a turbulent financial world. In this video, I'll break down exactly what has happened with silver, why it matters for you right now, and what might unfold in the weeks and months ahead. What happened this year? Silver has delivered one of its most impressive rallies in decades. Since the beginning of 2025, prices have risen roughly 40 to 50%, pushing toward levels we haven't consistently seen since the last big commodity cycle more than a decade ago. At one point this month, silver flirted with the $40 per ounce mark, breaking through resistance that analysts had been watching closely. For many Americans, silver feels like a forgotten metal compared to gold. Gold always dominates the headlines. But here's the reality. Silver has quietly outperformed gold this year. If you had been holding silver instead of gold since January, your percentage gains would likely be much higher. That's the reason investors are starting to ask, is silver finally breaking free from gold's shadow? The Fed's big shift. The most direct driver behind this rally has been the Federal Reserve. After holding rates steady for almost a year to fight inflation, the Fed has finally begun to ease monetary policy. In September, the central bank cut rates by 25 basis points. While that may not sound like much, the signal it sends to the market is powerful. The Fed is moving into an easing cycle. Lower interest rates mean two big things for silver. First, the US dollar tends to weaken when rates fall. A weaker dollar makes silver cheaper for global buyers, boosting demand. Second, when bond yields drop, the opportunity cost of holding metals goes down. Investors no longer feel the same pressure to park money in treasuries. Instead, they look to precious metals, and silver is now back on the radar. And remember, the Fed isn't done. Many economists expect at least one more rate cut this year, possibly two. Every step down in rates makes silver's case stronger. Silver as a safe haven. Silver is unique because it carries two identities. On one side, it is a safe haven metal, like gold. On the other, it is an industrial powerhouse. In times of financial stress, silver benefits from fear. Investors buy it because they want security. Right now, global uncertainties, from inflation risks to geopolitical conflicts, are adding premium to silver prices. Consider what's happening around the globe. Tensions in multiple regions continue to escalate. The global economy is slowing unevenly, with some nations facing recession while others push stimulus. The US election season is heating up, injecting uncertainty into policy outlooks. All of this builds the case for safe haven demand. Silver is attractive because it's accessible. You don't need thousands of dollars to buy an ounce like you do with gold. For US households, silver coins, bars, and ETFs feel like a practical way to hedge against uncertainty. The industrial engine. What separates this silver rally from past cycles is the strength of industrial demand. Unlike gold, silver is critical in manufacturing. It's used in solar panels, electric vehicles, electronics, and emerging green technologies. Every major global transition, especially the push for renewable energy, depends on silver. Take solar panels. They require silver paste for conductivity. The demand from the solar industry alone has reached record highs this year. Electric vehicles also need silver in their wiring and advanced systems. With US and global policy pushing for more clean energy and EV adoption, silver demand is structurally increasing. At the same time, silver's supply is constrained. Major mines in Mexico, Peru, and China are producing, but new discoveries are limited and ore grades are declining. The Silver Institute has repeatedly pointed out that deficits, where demand outpaces supply, are becoming the new normal. For investors, this supply crunch adds fuel to the rally. The gold to silver ratio. Another factor to watch is the gold to silver ratio, a historical measure of how many ounces of silver it takes to buy 1 ounce of gold. For much of history, this ratio has been closer to 40 or 50.
In recent years, it shot up above 80, even touching 90 at times, which suggested silver was undervalued compared to gold. Now, as silver rises faster than gold, the ratio is coming down. This is a signal that silver is catching up to its historical relationship with gold. If the ratio continues to normalize, silver could easily push toward $45 or even $50 per ounce without gold having to rise significantly higher. Risks and volatility. Of course, silver is not a straight line upward. It is historically one of the most volatile commodities. For US investors, it's important to remember that silver can swing sharply in both directions. Risks include, if inflation cools faster than expected, the Fed may slow down their rate cuts, which would dampen momentum. If the US dollar suddenly strengthens due to foreign crises, silver could face pressure. Industrial demand, while growing, is sensitive to global economic slowdowns. A sharp recession could temporarily hit demand for EVs and solar panels. That said, long-term structural demand remains intact. Even if there are corrections, the broader trend appears strong. So what's next for silver? Here are the key themes in the weeks and months ahead. Federal Reserve policy. The Fed's next meeting and its commentary will be critical. If they signal more aggressive cuts, silver could spike further. Dollar watch. Keep an eye on the US dollar index. A weakening dollar is bullish for silver. Industrial updates. Watch solar, EV, and electronics demand. Any new government policies or corporate announcements in these industries will directly affect silver. Investor flows. ETFs backed by physical silver are seeing inflows. If these accelerate, it's a clear sign that mainstream investors are taking silver seriously again. Why silver matters for everyday Americans. This isn't just about traders or hedge funds. For everyday Americans, silver represents an opportunity and a warning. It's an opportunity because silver is still affordable compared to gold. Families who want to protect savings against inflation see silver as an entry point. But it's also a warning because silver's rise signals deeper economic concerns: weakening trust in fiat currency, rising demand for safe havens, and industrial bottlenecks. In other words, silver is telling us something about the health of the economy. When silver shines, it often reflects stress beneath the surface. Today, September 21, 2025, silver is more than just a shiny metal. It is the intersection of fear and hope, of financial stability and technological progress. For US investors, it may be one of the most important assets to watch right now. Will silver break through $50 this year? No one can say with certainty, but the pieces are in place. Federal Reserve cuts, rising industrial demand, tight supply, and safe haven buying. Whether you own silver or are just watching from the sidelines, the next few months will tell us if silver is about to enter a new era.